Hello, everyone. This is Richard, and this is part one of my Pokemon OPCG cross-sectional research. We'll be looking at the Pokemon trading card game pre-COVID and see what we can learn about it, learn about OPCG. Let's get started. My research question was, how did Pokemon Go cards perform pre, during, and post COVID-19? And then what can we learn looking at the One Piece card game? Finally, what can we expect from the market moving forward? We look at the not Pokemon Go cards, the Pokemon trading card game. For this presentation, we're focused on pre-COVID, and then we're going to look at the full life cycle of the One Piece trading card game, and you just see exactly what can we learn, and what can we expect from One Piece going forward. I think this is very important, especially as Cultured starts to invest a lot more money into the One Piece card game, that we look at something very similar to see how that went, and then maybe we can we'll be able to predict what's going to happen in One Piece. My tech stack was pretty simple. Nothing too technical this time. I was really going at it trying to find something. Maybe I'll use a little bit of Python, but then when I realized a lot of this data is publicly available, I won't have to do too much scraping, none of that. Just a lot of just going through the internet, finding sources, and then just going based off that. So I use Google spreadsheets, Google Trends, online text like social media posts, articles, the school website, etc. And of course, this Google Slides presentation. My method was to use Google Trends to measure public interest in the Pokemon card game. And then I segmented the timeline to pre-COVID and post-COVID phases. Identify key increases and decrease periods in interest, and then match age inflection point with external analysis. Why did this happen? Was it because of a media release? Was it etc.? And then I classified the movements as organic growth, media-driven spikes, hype corrections, etc. And then I compared Pokemon's historical patterns to the One Piece pattern post-2022. I put references about volatility, hype cycles, and other sorts of dynamics. So it can get very complex, but I'm going to try to simplify it for you as we move forward. Some key terms to remember are Google Trends. You're like, what is Google Trends? It's a website that measures interest for a specific topic using information sourced from Google and YouTube. That's why I was like, I don't really need to do any scraping, no sentiment analysis, etc. like I did with my other projects. Google Trends kind of just did it for me. The One Piece card game, OPCG, Pokemon trading card game, PTCG, and then volatility, which is just the frequency of fluctuations in the line graphs. You're looking at stock. Is the stock price going up? Is it going down? If it's going up and down a lot, like a really scary, insane roller coaster, there's a lot of volatility. This is a screenshot of general Pokemon card game interest from not when it began, when Google Trends started tracking in 04. Isn't that crazy? 2004, 22 years now. Game started in the 90s, but from when they started tracking 04 all the way up to this is pretty much where it is today. As you can see, there's a lot of volatility, and I'll explain the reason for that later. But one thing you notice is that nothing's really it's definitely far from a straight line, if that makes sense. So the points of importance, and this is a screenshot I took from Google Docs, of the Google Docs I made. So we're May 04 to July 04, where we saw an increase due to early franchise expansion. January 2007 to July 2007, June 2016 to August 2016 to February 2016, December 2017 to March 2018, and just beginning to mid of 2019, and then towards the end of 2019. Those are the most important time periods, and I mentioned the reason why they're important and what direction the market went. It increased, decreased, increased, decreased, and now I'm going to talk about why. I'm going to go deeper into why the direction it did, and exactly why it's important. Why am I even talking about this, right? So first we start to May to July 2007. This is really early in the trading card games history. So interest in Pokemon grew a good 14 points, moving from 17 to 31. At this point, Google Trends was fresh, even when the card game itself won. The tracking was. But in the end, you see look at this. You see a steady trend up. This focus right here from about when Nintendo created Pokemon USA in 2001, and then this trend can really just be explained as early franchise expansion. So the franchise started to pick up popularity, and then boom, you see a good amount of growth there. Next is June to August 2016. And then this time period, general interest in the Pokemon game grew and remained steady as new sets and eras were dropped or released. This is when things really went crazy. When Pokemon Go dropped, things really blew up as Pokemon Go was released. And then this is about the period where in the Google Trends they received a perfect score of 100. This is by far the most popular game at the time, and it can be directly explained to the Pokemon trading cards game rise in popularity. This is the reason it grew up. It grew so much, and it's because of Pokemon Go. And I added a little bar graph here to show this is the fastest game to reach 15 million downloads. Pokemon Go took 19 days. And with all those downloads, means people were interested. It led to sales, and new sets were being dropped. At this time period, this is when Pokemon was at its highest, at its best. And then August 2016 to February 2017, this is where it just fell off. I didn't go too deep into this because it's very simple. You look at this chart right here. Literally, this look end of 2016, end of quarter 3 2016, which is around that September October period, all the way into January. The drop was nuts, right? And that led to the stock falling off as well. Or not stock, interest falling off as well. This is because of that Pokemon Go hype. They couldn't keep it up, and so it just fell. The next inflection period is December to March 2018. So in this period, interest started to taper down to lows it hadn't seen in over a decade and a half. In this period, it dropped quite a bit. And my thing is blocking a little bit, but this right here, this dot, is what you have to focus on. This period, it just dropped to where it hadn't been since where it started. You can't see it, but this is actually lower about it. In fact, a little bit lower than it was in the early 2000s when it dropped. It fell from that Pokemon Go hype, then it fell even further just because there was no innovation at all and nothing interesting to show. But things changed in that January 2019 to May 2019 period. So general interest in the Pokemon card game grew steadily just because of the release of the Detective Pikachu set and the movie that came out, as well as the Unified Minds expansion. So I don't know if you guys remember this Detective Pikachu movie. I remember watching it actually. It was good. It was just good overall for the franchise. It definitely didn't take it up to the Pokemon Go highs, but it did lead to a short-term rise in overall Pokemon card game interest. And before again the market normalized back to regular levels. So nothing insane, but nothing as low as we saw in December 2017. And then October 2019 to November, so general interest in the Pokemon card game stabilized. This was good, but the thing is, this was overall a decrease. But this usually happens before December, where it increases. This is a general trend during the holiday period. Interest overall just goes higher, but before that, it usually drops. So this was just a short-term flattening of attention before seasonal demand pressures emerge. This is really, I thought this was important to point out because you see this at pretty much every single holiday season. There's a drop before it usually goes up, and that's what happened here. Summary is that the Pokemon card game has a consistent theme. So you have a normal stock trend, and then a new event drops. After that new event drop, it gives a boost, and then it just drops again until market stabilizes. So Pokemon is very sensitive to pre-COVID Pokemon numbers. So this new event or entertainment drops, they trigger sharp spikes in interest and demand. And then after this interest, it just drops again. So it's very sensitive and it's really led forward by events. When the time of events drops and it hits really well, Pokemon does very well. But it can never keep that up. It can never keep those highs up. And then it just drops again. So that's the point of those points of interest I pointed out earlier. Those were times where new sets or new events dropped. Very popular events, right? The franchise in 2004 when the franchise really hit, and then you can see a little rise. When those new events drop, Pokemon does very well, but then it just falls back to normal. And this pattern is just repeated again and again. And those, like I said, was the point of showing you those points of interest before. And so let's just see the relation to OPTC, the One Piece card game. This is the point. There is no pre-COVID OPCG data. which makes sense because it released in 2022. That doesn't mean we can't make inferences based on the available data. So, which is why I decided to look at pre-COVID, during COVID, post-COVID. See, just find a little how it relates and what we can expect, right? Because as we saw, Pokemon, it was heavily driven by set drops. It was driven by hype, and hype wasn't sustainable, so it just dropped right after. So I think it's very similar to those meme coins that have rug pulls, if that makes sense. It keeps on going up until someone pulls the rug and then it drops. Obviously it's not as volatile as that. It's not as insane, right? But it is similar to that in a way. But let's see how OPCG looks. So this is the trend line, as you can see. Like when it this is like it had like steady popularity until about this year. Not this year, it's 2026 now. Happy New Year, by the way. Until about last year. That's about like late last year when it went really high. And a little bit later actually is when I was told to focus on those games as well. Overall, you can see that it's going up and it's staying up, which is a little bit different to what we saw with Pokemon. So you keep Pokemon has regular amounts of volatility and growth in attention as time moves forward. So just normal development as a franchise becomes more well known. This isn't like what we saw early in that 2004, one of the first slides I showed, right? This is just normal development for a popular brand, right? Once it becomes well known and people start taking interest to it, it just grows. It grows and then it relatively stayed normal Pokemon until onto a new set that really caught people's eye, blew up, and then it just went to the moon, and then it just dropped right back down, and it more or less stayed normal, right? Until then, right? The One Piece card game is a little different. So this spike was nuts. It spiked immediately. I say due to One Piece's popularity, and its attention curve really resembles Pokemon's media-driven spike phase. So its growth overall, this general growth. That's in fact, I think it's fair to say long-term growth really resembles the short-term media-driven spikes we could see from Pokemon. Shock spikes, which is the media-driven spikes, Pokemon had were very common. You can see these spikes when new sets like the Detective Pikachu and new events, Pokemon, especially Pokemon Go drop. But One Piece doesn't really experience any shock spikes and then downturns. It's just been up, right? It's just going to the moon. So that's really what differentiates it, right? Pokemon has shock spikes, but I don't know how to say this, but One Piece as a whole is a shock spike. So if it always resembles a shock spike, is it a shock? Is it like an untimely spike at all, or is this just how it is, right? But yeah, it's interesting stuff. And post spike, interest drops exponentially and it just returns to normal levels. So there's still high volatility, right? But it's predictable volatility. It doesn't rise to the moon anymore. It just stays. It doesn't really drop to hell as well, right? There are times where it had like that December period, and that December period in 2017 going into 18, where it just dropped, right? Which was very well below the normal levels it usually is, but that doesn't really happen. Even then, it returns back to normal. Same thing when it goes really high, like this Pokemon, it drops back to this normal we can see right here, right? It's definitely interesting. But One Piece there's been slight drops in hype as time moves on, but it's nothing significant, and the growth continues to increase exponentially. And not exponential, the increase as time goes on. So it's just like constantly going upward, which is nuts. And which makes sense if you're actually familiar with the game. You can see it got very popular very quickly in a way that we haven't really seen before with any card game, especially not this Pokemon game. Besides Pokemon Go, of course, that was something. So what can we learn from this? So the Pokemon card game, pre-COVID data, does not really predict what One Piece's future will be like, because because the pre-COVID data is different. Is different from what we can see with One Piece. But what it does show us is that what it isn't going to be like. So Pokemon's pre-COVID growth was largely slow and organic, with occasional steep highs and then some drops. One Piece card game is just high. It's just like consistently rising higher and higher. And One Piece is unlikely to be like this. So when we're comparing One Piece that we have now, the One Piece card game, to Pokemon's data pre COVID, it isn't gonna be those largely normalized levels, and then before huge spikes, and then it drops from those highs, and then maybe some lows, and then it goes upwards back to normality. Its normal is those high spikes right now. It's just not the same. So that's why I said it doesn't really help us see what One Piece's future will be. But what we know it isn't is that it's not like pre-COVID Pokemon data. Well, we'll have to look at part two to learn more. So now we know what it is. Pokemon grew a lot during COVID, and I haven't really looked too much at the data yet, but I think it's going to mirror One Piece's a little more closely. So we're going to have to wait until next week to find out more. But yeah, these are the sources I looked at. It was mostly, of course, Google Trends, and then it was really just looking at Pokemon Go statistics. And all that they told me was that Pokemon Go was nuts, especially when it first started. But yeah, thank you so much for listening. And I'm going to be back with a comparison to the COVID data, which I expect to find something, to find data, to find like insights of more substance. Yeah, thank you for listening.